Time now for an in-depth look at the market news this afternoon. And for that, I'm joined on the line by Dr. Jun-sok, professor of economics at the Catholic University of Korea. Professor Yang, good afternoon. Thank you for coming on.
Happy to be here.
Well, stocks on Wall Street ended last week with a substantial gain, but at the same time, there were reports saying that the Biden administration is going to raise capital gains taxes on people with ultra-high incomes. We also got corporate earnings coming up, but tell us about this gain in the U.S. market and what you see ahead this week.
Okay, well, the announcement of possible Biden tax came on Thursday, and it hit the stock market on Thursday. It lowered the stock market by about 1%, but it recovered on Friday. I think basically because everybody expected this increased capital gains tax on the rich. The detail would be that the proposal that President Biden supposedly have in mind, he hasn't announced it yet. He will announce it probably on the joint session of Congress on this Wednesday, U.S. time, and the proposal will likely to raise the capital gains rate to 39.6% from about 20% currently for those earning $1 million or more in capital gains. And he wants to raise the capital gains tax to help pay for the stimulatory fiscal policy, his Build Back Better infrastructure agenda. But the market basically gained on Friday because, as I said, everybody pretty much expected that President Biden will increase the capital gains tax. So that was built into the stock prices to begin with. And then there are some very important meetings this week. The FOMC is meeting this week. And then the earnings report for the first quarter 2021 is currently coming out. And about a third of the S&P 500 firms are coming out this week, including the biggest firms like Apple, Microsoft, Amazon, and Google. And so far, the earnings report have been very, very good. About 25% of the companies in the S&P 500 have reported their first quarter results so far, and of them, 84% have reported positive per share earnings surprise, and 77% have topped revenue estimates. Now, if that 84% figure holds, then it will tie the mark for the highest percentage of S&P 500 companies reporting a positive earnings per share surprise since they kept track of this statistic in 2008. Now, for the European markets, it went up on Thursday, came down on Friday. DAX, CAC, and FTSE fell between 0.0 to 0.3% on Friday. They've been basically following the U.S. markets. Remember that European markets start earlier, so they did not catch up on the Friday's market recovery in the United States. Asia was down on Friday for similar reasons. Their results are mixed today. Nikkei is up about 0.4%. Shanghai is down about minus 1%, and Hang Seng is down about 0.5% today.
And today in Korean stocks, the KOSPI rising above 3,200 points. Investors looking to strong earnings from domestic companies. The KOSDAQ up today as well. What's the story in the local market?
Okay, well, KOSPI seems to be doing very well. It broke 3,200 last Monday, but then it fell below 3,200 for the rest of the week because it fell so much on Tuesday. But it rose for the rest of the week, but it did not quite recover beyond the 3,200 level, but it did recover beyond the 3,200 level today. It closed today 17.53, went up by 0.99%. It was led by foreigners, while the institutions and individuals sold. KOSDAQ, you can argue that they've been doing better than KOSPI. They broke 1,000 2 weeks ago, and since then, they've only been 2 days where the stocks fell. It ended today at 1,030.06. It went up by 0.32% today, and it was led by individuals, while foreigners sold, and institutions, well, they were on the net about level.
Well, turning to some economic data, Professor, data show that in the first quarter, Korea had 2 million people of working age who were not looking for work. It's the first time there's been that many of what are called discouraged workers, I believe. Tell us about that phenomenon and what you think might be done about it.
Okay, well, this latest data is from the economically active household analysis, micro-level data, which is kept by the National Statistics Office. We've been getting monthly figures, but they've been giving general pictures, the monthly figures. This figure actually tracks individuals and households, so it gives us a better idea of why people are searching for jobs or not searching for jobs. And as you mentioned, the number of discouraged workers hit 2 million. That's the highest on record so far. But if you look at the monthly figures to try to help interpret these numbers, then in January and February, the economically inactive workers, which includes discouraged workers, have increased. Now, the reason for that was attributed to increased distancing, increased instances of coronavirus, as well as the deepening distancing measures, which did really, I think, lower the hopes for people getting jobs. There's not that much jobs available because there's distancing and because the economy is not doing well. Now, on March, we saw that turn around a little bit. We saw the number of non-economically active population fall while the number of economically active population rise. We also saw the unemployment figures rise a little bit, but that was interpreted as good news because more people were searching for jobs. So if we look at this first quarter numbers in monthly terms, I think we'll see that the situation was very bad in January and February, but it turned around on March. Now, it's also, I think, instructive to see the age group. This number of discouraged people during the first quarter rose in all age groups, but especially people over 60. For people over 60, they increased by 10.8%. And the reason that it increased so much, as I said, is probably because of the increased distancing measures and increased fear of coronavirus. And you have to remember that the over 60s, if you look at the monthly figures, their employment actually rose over the long term. So it shows that I think people have been very scared of the coronavirus. But as I said, in March, we saw that situation turn around. So I expect the number of discouraged worker figures to go down substantially in the second quarter.
Well, let's hope so, Professor. We'll have to leave it there for today, I'm afraid. Thanks so much for sharing your insights with us, as always.
Thank you.